Okay, this is going to be a homework walkthrough for chapter 14-2. We'll start with question 1. Comparative financial statements for Weller Corporation, a merchandising company, for the year ending December 31st appear below. The company did not issue any new common stock during the year. A total of 500,000 shares of common stock were outstanding. The interest rate on the bond payable was 10%. The income tax rate was 40%, and the dividend per share of common stock was 75 cents last year and 40 cents this year. The market value of the company's common stock at the end of the year was $29. All of the company's sales are on account. So I have taken the information that they gave me in the book and copied it into my Excel so that I can reference those cells on my balance sheet and my income statement. Now, what are they asking us for? Required. Compute the following financial ratios for this year. For all requirements, round your answers to 2 decimal places. So the first one is times interest earned ratio. And the definition of that is the earnings before interest expense and income taxes divided by the interest expense. So I'm going to go equals. And again, we're doing this year, so I want to reference things in the this year column. So earnings before I believe it's this one. Nope, it's this one. So it's before interest expense and before income taxes. So it's the net operating income just above interest expense divided by interest expense. Okay, so there's my times interest earned ratio rounded to 2 decimal places. All right, required 2 debt to equity ratio equals total liabilities divided by stockholders' equity. So let's scroll up and find total liabilities divided by total stockholders' equity. All right, and then my equity multiplier. I'm gonna have to find a couple of averages here, the average total assets and the average stockholders' equity. You could do all of this in one cell. That's a lot of parentheses, and I tend to make mistakes. So I'm going to figure out my average total assets by taking this year plus last year, and I forgot my parentheses already. So make sure those are in parentheses, divided by 2. And that gives me average total assets, and then average total stockholders' equity equals parentheses this year plus last year, close parentheses, divide by 2. Okay, so I have my average total assets, average total stockholders' equity. So now here I'm going to go equals average total assets divided by average total stockholders' equity. So I have 1.64. All right, question 2. And in this homework assignment, be kind of careful. They kind of look the same, but they change up some of the numbers up here in the words. So pay attention to that. And some of the numbers in the balance sheet and income statement are changed as well. So even though the company name is the same, they changed the data on you from question to question. Comparative financial statements for Weller Corporation, a merchandising company for the year ending December 31st, appear below. The company did not issue any new common stock during the year. A total of 890,000 shares of common stock were outstanding. The interest rate on the bond payable was 12%. The income tax rate was 40%, and the dividend per share on common stock was 75 cents last year and 40 cents this year. The market value of the company's common stock at the end of the year was $22. All of the company's sales are on account. All right, so I am going to figure out my average total assets again, equals parentheses this year plus last year, close parentheses, divide by 2, and my average total stockholders' equity equals parentheses this year plus last year, close parentheses, divide by 2. Okay. And then I referenced here, there's my bond interest, right? They told me that right there, 12%. And my income tax rate was 40%. Okay, so gross margin percentage, that is going to equal, and again, we're doing it for this year. So reference the numbers in the this year column. So gross margin divided by total sales. And that one is being rounded to 1 decimal place. Net profit margin percentage is net income divided by sales, so equals, let me see, I want to make sure I pick the right net income. So it's going to be the one that's just above where we pay the dividends. That's what I thought, but I wanted to be sure. So equals the net income, so the one that's just above the dividends, divided by total sales. And again, we're doing this year. And this one is also rounded to, it's a percentage, and then you round it to 1 decimal place. Okay, return on total assets. That's a little more involved. So equals parentheses net income plus parentheses interest expense times one more parentheses 1 minus the tax rate of 40%. Close that parentheses, close that parentheses, and one more to get them all closed. And then it's going to be divided by average total assets right there. So 9.8% rounded to 1 decimal place, and it is a percentage. All right, return on equity equals net income for this year divided by average total stockholders' equity. So 13.59%. This one is rounded to 2 decimal places, and it is also a percentage. That's question 2. Question 3. Again, it says the same company name, but they've changed the numbers on it again. Comparative financial statements for Weller Corporation, a merchandising company for the year ending December 31st appear below. The company did not issue any new common stock during the year. Okay, that's important. A total of 100,000 shares of common stock were outstanding. So there was, 1 million, sorry. 1 million shares this year and 1 million shares last year. And so we're going to need to know the average number of common shares of stock. And if you take 1 million plus 1 million divided by 2, the average is 1 million because it didn't change. So that'll be important to know later. The interest rate on the bond payable is 12%. The income tax rate is 40%. The dividend per share of common excuse me, common stock was 75 cents last year, 75, and 0.40 this year. The market value of the company's common stock at the end of the year was $28. Okay, so we've got our whole balance sheet, and I just made a copy of that information. I just typed in right here. Okay, earnings per share is going to equal the net income this year again, right there, net income divided by the average number of common shares outstanding, which is, like I said, just 1 million. Nope, that's not right. Oh, I know why it's not right. So again, this is something they do sometimes that really messes some things up. This is dollars in thousands. And so my net income says 7,140. What they really meant is it's really 7,140,000. They took off 3 zeros. And so I either need to add 3 zeros to this or take 3 zeros off of this. And so if I just reference the common stock right there, that should fix my problem. Let's try that again. Equals net income divided by 1,000. So $7.14 is my earnings per share. So hopefully you understood that. I could have done it the other way and done equals 7,140,000 divided by 1 million and still got the 714. So again, either you need to take 3 zeros off of your outstanding shares or add 3 zeros to your net income to come up with the earnings per share. And watch out for that on the exams as well. That when they're talking about number, you've got to make sure if they've taken zeros off of your dollar amounts, then you've got to also adjust your number of shares so that it comes up with the right answers. Okay, price earnings ratio, market price per share, which was my market value, divided by the earnings per share that we just figured out. Dividend payout ratio equals the dividends per share this year divided by the market price per share. Oh, and I forgot to note, the first one is dollars rounded to 2 decimal places. The second one is dollars rounded to 2 decimal places. The third one is a ratio, it's a percent. And you round it to 2 decimal places. Dividend yield ratio equals dividends per, oh, whoops. Oh, I did that one wrong. Sorry. Dividend payout should actually be dividends per share divided by earnings per share. So dividends per share divided by earnings per share. There we go. That's better. Okay, sorry about that. So again, required 3, dividend per share for this year divided by the answer we got for number 1, the earnings per share. Number 4 is the dividends per share divided by the market value per share. And again, that's a percentage rounded to 2 decimal places. Book value per share equals total stockholders' equity, just stockholders' equity, divided by the common stock shares. So obviously my common stock is worth $1 per share. I don't remember where they might have told me that, but anyway. So that is required, that's question 3. Okay, question 4. So the financial statements for Castile Products Incorporated are given below. So here's my balance sheet, just like it's in the book. And here's my income statement. And then they give me some more information. Account balances at the beginning of the year were accounts receivable, 210,000. Uh, Inventory, 290,000. All sales were on account. Assets at the beginning of the year totaled 1,030,000. And the stockholders' equity totaled 645,000. Those numbers are important for if we need to find an average. We take the beginning plus the one on the balance sheet and divide by 2. And then I'm going to reference my income tax rate right there because I'm going to need that for one of my calculations. So gross margin percentage equals gross margin divided by total sales. Net profit margin percentage equals net income divided by total sales. Now, return on total assets equals, parentheses, net income plus, parentheses, interest expense times, parentheses, 1 minus the tax rate, close parentheses, parentheses, and close parentheses, divided by average total assets. So I'm going to do it in one cell, and let's see if I can do this right. So we're going to go open parentheses. I'm actually going to do 2. This beginning plus the one on the balance sheet divided by 2, and then close one more set of parentheses. So hopefully that was enough parentheses. So there's that one. You can see why most times I take and do the average just so I can reference it, but it worked. I got all my parentheses right. So net income plus interest expense times 1 minus the tax rate, and all of that divided by average total assets. All right, return on equity equals net income divided by average stockholders' equity. So I'm going to do 2 parentheses here. The beginning balance plus the one on the balance sheet, close parentheses, divide by 2, close the other parentheses. Okay, so net income divided by average total stockholders' equity. Okay, and all of these are percentages rounded to 2 decimal places. So financial leverage, first I'm going to show you how to figure this out, even though you don't have to put the number into your book. It just equals total assets divided by total stockholders' equity. Okay, but what they really want to know is this financial leverage positive or negative? And the best answer that I was able to come up with is if you look at the return on total assets for required number 3, for mine it's 24.16%. And the definition of a positive financial leverage is when this return on total assets percentage is greater than the percent that I'm paying on my long-term bonds payable. And it is, so mine is positive. If this required 3 had been less than 12%, then it would have been negative. And that's the best answer I could come up with on why and how to figure out positive or negative on financial leverage. All right, question 5. Let's see. This one's a little tricky. So we're going to find a couple of things. The financial statements for Castile Products Incorporated are given below. So real quick, just to save myself some grief. Okay, so accounts receivable is 170,000. So 170,000 plus, whoops, plus 230,000, close parentheses, divide by 2. Okay, and then merchandise inventory was what? 260,000. So equals parentheses 260,000 plus 330,000 from the balance sheet, close parentheses, divide by 2. Now this is a question because some of the calculations we need to know the number of shares of stock. And nowhere here does it tell you the number of shares of stock. The way you figure that out is going to equal the amount on the balance sheet for your common stock divided by the par value. So for mine, it's $5. So I have 20,000 shares, but that's how you figure out the number of shares of stock is take the amount here on the balance sheet divided by your par value, and that gives you the number of shares. Okay, I believe that's all I need. Oh, no, it's not. So let's see. Assume that Castile Products Incorporated paid dividends of $2.65 per share. Okay, so real quick, I'm going to figure out what's my total dividends, and that's going to be the per share times the number of shares of stock. So there's my total dividends. I need that later. And then also assume that the company's common stock had a market price of $59. So there's my market price. Okay, compute the following financial ratios. And it looks like all of them are rounded to 2 decimal places. So earnings per share ratio equals net income divided by the average number of common shares outstanding. So the number of shares. Dividend payout ratio equals the dividends per share divided by the earnings per share we figured out in required 1. And again, the first one is a dollar amount rounded to 2 decimal places. This one is a percentage rounded to 2 decimal places. Dividend yield ratio equals dividends per share divided by market price per share. And then price earnings ratio equals market price per share divided by earnings per share, which again was the answer to required 1. And then book value per share equals total stockholders' equity divided by the number of common shares outstanding. So total stockholders' equity divided by the number of shares outstanding. And there you have it.